Hey there, an important part of setting up a realistic working budget is to make sure that you get your bank account structure right. This is one of the most common questions I get is, well, how do I set up my bank account? Should I have a bank account for each expense category, or should I just have one bank account? Well, great questions. The ideal is you have just 3 bank accounts. Now, it's slightly different if you've got a mortgage. In this video, I'm going to assume that you don't have a mortgage, but I am going to have another video, so have a look for it. There's another video there talking about what is the ideal bank account structure when you do have a mortgage. But for now, let's have a look at what your structure should look like if you haven't got a mortgage. Pretty simple, 3 bank accounts. In the center, we have one central working account that has all the bells and whistles of a normal bank account. So you can do direct debits, periodical payments, transfers, etc. Now, all of your household income should flow into that central bank account. And if you're a couple, yes, that includes you. One of the things that I'm most passionate about is working with couples to help them get on the same page financially. And a big step in that process is to make sure that it's our money and it's all going into one central account so that we can make the most of it. When we've got 2 budgets, every budget leaks. So when we've got 2 budgets, there's a lot more leaking going on, and you will never achieve as much when you're managing your finances separately. So couples, can I encourage you, get on the same page. But what we've got here is one central account. All sources of income should first and foremost flow into this central account. So I know that some people will have money being transferred from their pay over to their mortgage and maybe over to the car loan or put up into savings. Don't do that. First and foremost, get all your income going into one central account. Then what we want to do, in that central account, this is where all our direct debits, periodical payments, transfers, etc. come from. This is also where we would pay our credit card off from. So all the money that you're accumulating for your future expenses, so all the money you're accumulating for your car expenses, your utilities, for your loan repayments, for hobbies, sports, etc., should all sit in this central account. So when we budget at Grandma's Jars, we use virtual jars. So you think about the envelope system or the jar system where every month you put aside 1/12 of your future expense into a jar, into an envelope. Well, we have virtual jars. And so all those virtual jars, the money for those virtual jars that are accumulating to pay your car rego and accumulating for your insurance bills and those sorts of things, all sits in this central account. What then happens is, on the first of every month, and this is really important, if I give you no other tips to save you hundreds of dollars every month, your everyday spending money, which is groceries, petrol, parking, takeaway, entertainment, you bought coffees, you bought lunches, you're dining out, all that discretionary sort of money should be isolated into a separate bank account. This is where we waste most of our money, and this is where 50% of our transactions come from. By isolating it into a separate bank account, you are giving yourself a physical boundary that says, this is how much I've got for the month, this is all I've got for the month, I need to make it last or it's baked beans and mashed potatoes. This, I promise you, try this, it will save you so much money it's not funny. And you probably won't even miss it too much. Isolating your everyday spending money down here, all our income goes in here, and then anything that's left over should then flow up into savings. So let me give you a very, very good example here. Let's just say that we're earning, pen's not working very well, $5,000. 4,000 of it, so it all travels into our central account. We need $1,000 for our everyday spending. And let's just say the total of our jars here that we top up our jars every month is $3,000. That means we actually have $1,000 to put up into savings every month. Every bank account should have a very, very specific purpose. Very important. And as I said to you, any money we spend from our jars, if we spend it on our credit card, we only spend it if we know we've got the money backing it up in the bank account. So then, at the end of the month, we can pay off the credit card. So there you go, very quickly, the ideal bank account structure. I promise you this works. I've been using for 15 years of budget coaching, and it's a fantastic system. So there you go, ideal bank account structure if you don't have a mortgage. Now, if you are interested in saving money, if you're interested in spending less, if you're interested in breaking the paycheck cycle or paying off debt or achieving lifestyle goals that are really important to you, can I encourage you to subscribe to this YouTube channel? Every Tuesday and Thursday, we will release videos about managing your personal finances. So please subscribe below, and I look forward to seeing you in the next video.